Hey everyone, I hope you guys are doing well. I wanted to kind of get into an article today that I was looking at in terms of the real estate market. What's kind of going on with it? Has it cooled off? Is it going back up, going back down? What all this talk is about the Fed and interest rates, how that's likely to impact things. And I kind of wanted to dive into this article and kind of like break it down on what's really going on and what they're expecting to happen here. With that, let's look here at Market Watch, and it says a crystal ball to make sense of the real estate market right now. All right, so if we get in, if anybody's been trying to buy a home lately, at least in the last year, I know I have, and it has been a nightmare. There's tons of bidders, overpriced houses, things that you saw in your neighborhood going for crazy low prices, at least what it seemed like crazy low prices a couple years ago to now is just insanity. And I live in Florida where we've had a ton of people migrating here, and we've had a ton of people bidding up the prices of houses because if you're in New York and you come down here to Florida where houses are relatively cheap compared to a New York apartment, you're going to have no problem spending $500,000 to $1 million on a home that maybe in our market we would have normally paid 280 to 350 for, right? So you have no problem with that. You have a much higher income than us. And that's all relative to kind of where you live. But at least where I live on the Space Coast over here where Elon Musk launches all of the shuttles. And in my area, we've seen a massive run up, but I'm sure you guys have all in your area as well too. But let's kind of dive into what they're talking about here and really get into the nitty gritty of this that this article is saying. So it basically says that realtors are describing the second home market as stuck. To better understand what that means, they asked a few folks in the industry and see about this crystal ball, right? So EH, which is the Escape Home, says buyers don't feel quite the same urgency as earlier in the pandemic, and sellers are wanting the high prices they saw their neighbors get. Thoughts on what's to come. So basically, what that kind of tells me is that the market is supply and demand. That's kind of the real estate market is a really good indicator of what you would view in economics as supply and demand. It's a really good gauge of things. And what basically the saying is buyers are not as urgent, thus less demand, um, but sellers are still wanting the higher prices, right? And I own a used car dealership, and I kind of see the same thing going on as well. The prices of cars at auction and everywhere else is also skyrocketing. Meanwhile, the demand of people trying to buy those same cars not as high. So it comes to this very interesting thing where the market was kind of set at this price, and people are really kind of unwilling to let things go for a lesser value. And let's get into this a little bit. We're definitely not in the frenzy state of lockdown induced home buying anymore. The big wave of adjustment in the new pandemic state of the world was gone. In other words, the one-off bulk of people who newly made sense to buy second homes because of the pandemic have acted upon it. So basically, they're kind of saying that people that really wanted to buy a second home for whatever reason is pretty much done. So they bought their second home as if the entire pandemic induced euphoria was based on just the second home buyers. But I think that's kind of what they're alluding to is maybe that's a big portion of it. A lot of these people that wanted second homes, maybe like I was talking about, they have their New York apartment, they want their secondary Florida home. Maybe that being the restrictions in certain states based on the virus and how they maybe wanted to bounce back and forth and whatever they decided to do, maybe spread out. There's a tons of reasons why people buy houses, right? So those left buying second homes now are a gradual flow of people reaching the conclusion they can and want to buy a second home as opposed to the one-off mass whose circumstances shifted all of a sudden last year. And even if the pandemic state of the world means that the flow of second home buyers now is greater than it used to be pre-pandemic, it's probably still a trickle compared to that initial wave that passed. That's interesting, and I'm not really even sure. The initial wave is very interesting that we had this massive wave of people. Not sure if it's more related to people just staying at home, and now you're at home and you want a bigger house to be at home. I know that's what happened with me. I have a couple homes, and we moved my family from one of our 2,000 square foot homes to our 4,000 square foot homes. I had three kids, and it is a huge difference in space when you're going to be just basically quarantined inside of a house. And the same thing happens probably maybe for some people they want to get a bigger space if they're going to be home more, or if they're working from home, maybe they want a better setup or an office space that they want to review. Maybe that's what they're looking for. So there are many reasons why people buy homes, and it's interesting that there's a wave of people and that's kind of gone. And I also maybe venture to say it might be because of all the stimulus. I know that during the stimulus, when all those checks were coming out, my car dealership was thriving. We were selling cars left and right, couldn't keep them on the lot. That drove prices up, and I wouldn't be surprised if, being that I made more money then, so did tons of other people in other areas of the United States and world. Made a lot of money if you're a business owner, and maybe you have all this extra cash and there's nothing really you want to invest in. Maybe you think the stock market's in a bubble or whatever it may be. You sit there and jump over to the real estate market, and you know that your cash is at least safe inside of a home. And a lot of these people, bought houses with cash. Maybe they're just flush with cash and wanted to make sure that if there was inflation, they kind of had a little bit of protection there. So this is, now they ask, how do you think financing looks over the next year? We've been in an era of low interest rates for so long, yet second home markets feel like cash is king. Redfin CEO and president, Glenn Kelman, said the second home market depends on more on the stock market than on interest rates, but the second home market depends more on the stock market than on interest rates, but rates usually affect the stock market. Okay, rates are going up. Some buying is fueled by investors, but folks are borrowing money too. An era of low rates makes it easy to cash flow a house. His colleagues, Deputy Chief Economist, say credit for the second home purchases tightened in the spring has been recently eased again, which is at least part explained by the sudden dip in March and subsequent rebound in September. I kind of see what they're saying here. Basically, a lot of these people that are buying these homes in cash, maybe back to our point, the stock market shoots up. In that point, they sell off some of their investments to put it in maybe something like real estate, whether they feel that's safer or not, or they want a second home with the money that they made, right? Maybe they bought Tesla stock and it's skyrocketed, 800%, and now they can afford to buy a home and still maintain some of their Tesla stock or whatnot. As interest rates rise, that tends to be a burden on the stock market, especially tech stocks. They end up taking the biggest hit because that's where they get all their capital from. Because they're not usually profitable at the beginning. Obviously, Apple, Google, those guys are big timers. But these new ones that are coming out that are really running sort of when Amazon came out back in the 1999 and that era. They didn't make much money for a long time. And a lot of it was fueled by just the potential. And obviously, Amazon's massive now, but back then they weren't, right? And all that happens to a lot of these places. They get squeezed. A lot of these tech places get squeezed because they're running really on capital. If the capital moves itself out of here and moves it somewhere else, because the way that a lot of things work is people are looking for less risk in a time of uncertainty. Now, with interest rates so low, banks are offering such low rates. Other things offer such lower rates of return. But if, let's say, interest rates rise to 5% and you can get something around 4% in a CD, which is deemed safer and guaranteed by a bank, a lot of people are more willing to do that with a larger sum of money. They pull it from stocks, which are kind of uncertain because you don't know if Apple's going to go under tomorrow. It's unlikely, but there's probabilities on everything. And so that's kind of why money starts to shift back and forth between the stock market and between interest-bearing items that are deemed less risky, right? Everybody has their own risk profile. And so that kind of happens, makes that shift, causes the stock market to go down or crash a lot of the times. And then that, leads to people not buying and the real estate market crashing. Interest rates go up, less people can afford to buy a house at $400,000 at 5% interest. Then can afford to buy one at 2% interest. And it's really based on their payments, right? Most people are buying based on their payments, but this is really talking about that 60% or so of the cash buyers, which I did see when I was trying to buy a house. There were people dropping $600,000, $700,000, $800,000 on houses I was bidding on, and they were all cash. And I thought it was very strange, but a lot of my real estate agents friends told me, and the people that I was using were saying that basically these people are buying them and then they'll refinance them in a year and get that money right back out to them. So that's, I guess one strategy, and it just kind of depends. But a recent report, let's see what this says, from the National Association of Realtors, had the all-cash share of the second home purchases in February to March of 2021, according to north of 60%. Because those 60% are wealthy individuals buying all cash, means the second home probably is less susceptible to seeing reduced demand following a potential rate hike. Although squeezing the remaining 40% could still hurt it. On the other hand, as much as those 60% are investors who appear to be paying all cash but are nevertheless using leverage. Leverage isn't tied to mortgages on the individual's property they're buying. It could be susceptible when rates go up. At least the pool of investors won't replenish as fast. If rates rise, existing investors may have fixed rates, right? And so kind of through October, Redfin's Mars said, we are still seeing elevated rates of second home mortgages. The data excludes pure investment properties, but surely these second home vacation home buyers plan to utilize Airbnb or other services offset the cost of members. That's not a guarantee. I know many people that own second homes that just have them. I have a second home myself. I don't rent out or do anything with. It's kind of like a glorified storage unit. And I could rent it out. I could do that, but I don't need to at the moment. So I currently don't. And so if we kind of think through this, I don't necessarily agree with what they're saying, because the thing with the real estate market, unless it's an investment property, so unless it's a property like an apartment complex that's based off of cash flow, and your cap rate basically makes your property valuable. That's why people like Grant Cardone and others can really get into homes and can increase the value of the investment apartment home. I say home, but apartments a lot faster, because basically they come in, they renovate, they increase rent, they grow their cash flow, their revenue that's coming in, and that in turn pays into their cap rate, which I can explain in a different video. And that actually will cause the price of the property to be worth more, and they directly control the value of the property. Whereas on single family homes, in which more of this article is talking about, is strictly controlled by the market. It is not controlled by these cash buyers or anything like that. And whether they buy the house cash or not is kind of irrelevant to the value of the home later on. Because if the market crashes in homes, the market crashes in all homes. They're not saying, there's no way that buying a house cash makes your house more or less valuable. It does not. You just bought it cash, right? If anything, you're kind of putting yourself in harm's way. If you buy the house cash and the market crashes, you just have access to less of your cash. Whereas if you financed it at a higher rate, you could still come in here with your cash, be that $600,000, and you could be investing that and offsetting some of this this payment as time kind of went on. With a different investment, maybe a different investment vehicle. But buying the house all cash, if I buy a $600,000 house, now it's worth $400,000. It's kind of really not a smart idea if you just kept the $600,000 as cash. If you were concerned about the market, you would have $600,000 now and be able to buy the house for $400,000 at a later time if the market were to crash. But to say that this article saying that this is not going to affect the secondary home buying, I disagree. I think the market crashes, stock market crashes, people get a little skittish. They put everything in cash. They put something in safer investments. Not stocks, but more like bonds and CDs. And I think that, these housing market crashes, we saw in 2008, 2009, how long it took to recover. I don't see this being one of those things where, oh, well, they bought it all cash, so the house is still worth $600,000 because the house crashed. No, it's not. It's worth whatever somebody's willing to pay you for it. And if people can only afford $1,500 a month, that could be a $600,000 house at 2% interest, or a $400,000 house at 7% interest. I don't really know if those are exactly get you to $1,500 a month, but basically it's all about the payments for most buyers. That's what dictates the market. It's not whether you bought it cash or not. But I'm curious to see what you think. Does that make sense to you guys? Does that make sense to what's happening in the market? Are you actually trying to buy a house? I'm curious to see if you're trying to buy a house, if you're having the same problems I had. I gave up actually on looking for a house. It got so annoying and frustrating. I looked at more homes than I'd ever looked at on any of my previous homes that I bought, and it just became very frustrating, very annoying. You basically just kind of lose hope on things. Like, I'm never going to get the house that I want, so there's no point in even trying to bid. And now if there's 15 bidders on a house, I'm not willing to overpay for something right now. Now, am I overpaying? Is the market topped? I don't know. But realistic, when I sit there and look at a house that sold for $600,000 and 3 months later they're listing it for $850,000 in the same condition it was before, and I see people bidding on it, I'm not going to buy in that market. It doesn't make sense. And that's just an insane market. So I kept the homes that I had, debated selling one of them, but I didn't. And now I'm just sitting here, comfy, cozy, letting everything kind of play out, letting the euphoria go away, being patient, and kind of working through that. That's what I did. That's what my wife and I did. But I'm curious what you guys did. Let me know in the comments below. Hit subscribe if you like any of this kind of stuff. And I will see you on the next video.